per my stock video, I was down 500 bucks. Not good. But this week, I'm over 1,000. And you know what else is up? The housing market.
Okay, hi. How are you?
Have a seat.
In the early 2000s, the US housing market kept rising, much like my stocks, and they had low interest rates after the 2001 recession, which made borrowing cheaper. Banks started lending out homes to more people, even with lower interest rate, with subprime mortgages. Most people and banks thought housing prices were going to continue to go up, much like my stocks. So banks started offering adjustable rate mortgages. And if the finance bro in me says, don't take those because those are bad, because if you get a variable interest rate, which is like an adjustable rate mortgages. One sec, let me look something up. Variable interest rate is the same thing as an adjustable interest rate, which is like a variable interest rate, aka an adjustable interest rate, is where if you get an interest rate of like 8%, it can keep going up, like as the banks raise interest rate. But if you get a fixed interest rate, which is what I got on my SLs, my student loans, they just stay there. So when banks raise interest rates, your interest rate stays the same. People were borrowing more than they could afford, assuming that they could refinance it later and sell it at a higher price, because people thought they could just sell the house later, so they were buying in at low interest rates of the adjustable interest rate, and then they're going to sell it later for profit. But so banks were lending out to the people that couldn't afford their loans because they were going to sell them later. But the banks weren't even going to hold on to them because the banks were going to sell those mortgage-backed securities, is what they called them, and collateralized debt obligations. When banks sell loans and stuff, they have different ratings. Like they could have a AAA rating or a AA, or like it goes to B, it's like a triple B, and then a double B, and then just a B, and then it goes to C, and then there's D, and I can't remember how low it goes, but it goes low. But what they were doing with the mortgage-backed securities, they would have a collection of debt, and they would put all the AAA ratings together, and it's like the peanut M&Ms. They were selling their peanut M&Ms, giving them away to their friends, and people love peanut M&Ms, but then what they started doing was they started putting the freaking regular M&Ms there and labeling it as freaking peanut M&Ms. So then your friend will come to you and they'll be like, dude, you want some peanut M&Ms? And then you open the bag and it's just normal M&Ms, and you're like, what is this? This is malarkey. That's when the collapse started happening. People didn't want those normal M&Ms. So then the housing market kept going down and it began falling. And homeowners with their adjustable interest rates started skyrocketing. So nobody was buying the houses and the interest rates were going up. So people stopped paying their debt because they couldn't afford it, and they began to be homeless. And they defaulted. Little default. And this started a domino effect because so many people couldn't pay their homes. The banks started raising their interest rates more, and then more people couldn't pay their homes and more people defaulted. Wasn't good. Lehman Brothers failed, and Big Stearns, and AIG, and they needed massive bailouts. Not them. They failed, like, fully. But other places needed bailout. There's also a really great movie called The Big Short. Totally recommend watching it. But the government had to step in, use bailouts like TARP to stabilize the financial system. But yeah, over time with the government bailouts, low Fed policy for low interest rates, clearing out foreclosures through investors and striker lending, and overall economic growth, the housing market fixed itself. And by 2013, 14, something like that, we were good. We were up, like my stocks, dude. That's kind of it. Short little summary. If you want more information, freaking subscribe. New videos coming out soon.